everybody says this time is different, but literally this time is different because of the ETFs and the volume there. I mean, Bitcoin was at an all-time high before the halving, which has never happened in a previous cycle. That light bulb moment for me was that conversation with Peter Schiff, and I don't even remember the gentleman's name that was talking about Bitcoin. But when he explained it as a protocol that allowed value transfer and removed counterparty risk, what if you could have instant for free? And then everybody inevitably said, well, yeah, I would pick that one. So did the banks. If you talk to the wealthiest people in the world, centimillionaires and billionaires, they control everything and own nothing. We're close to $1 billion in mostly XRP. We're looking at other assets that we believe will have future utility and figuring out how to put those assets to work to generate revenue and cash flow and mitigate taxes for our clients. Robbie actually created a calculator, but actually shows how XRP would need to operate at around $10,000 per token to fulfill its actual use case. If you look at the global macroeconomics and you look at the value proposition for the network itself, it can, I'm highly confident that it will achieve those numbers. But by 2030, if crypto is going to eat all of these other asset classes, I don't think people really comprehend all of the value globally in commodities and FX and business and real estate. If all of that's on chain and has to be moved by some of these networks, like that's a lot of value. Swift will end up adopting R3's infrastructure with Corda if there's enough liquidity in XRP and if there's legal clarity around stuff, which there is for XRP, and these other assets are still waiting on the Clarity Act. I think that R3, they would lean on XRP for the settlement of those transactions.
Welcome back, ladies and gentlemen, to the All In Crypto podcast. I am your host, Rupert, and today I am delighted and excited to be bringing on a much requested guest. Ladies and gentlemen, we have Jake Claver, the CEO of the DAG family office and a major voice in the cryptocurrency space on the show with us. So Jake, how are you doing, my friend?
I'm beautiful, brother. Appreciate you having me here.
The pleasure is all mine. And like I say, that many people asked us to have you on. We simply couldn't refuse them anymore. So you're obviously a much loved individual, and I can see why, having watched quite a bit of your content preparing for this. With my guests, I really like to start off with a little bit about themselves, because I find that there's such an eclectic group of us here in the cryptocurrency space, and we've all clearly migrated towards an opportunity that is being provided here with this technology. So if you could perhaps give me a little bit of an introduction into yourself, how you kind of got into the cryptocurrency space, that would be appreciated.
Yeah, absolutely. So I'm actually kind of a late bloomer in comparison to a lot of people that are pretty prominent in the space. I really didn't even understand crypto until 2020. Okay. So about 5 years ago, which seems like a lifetime ago now. But I'm sure you remember the lockdowns, yes, and everything that happened during that period of time. I'd saved some money for my wife and I to purchase a home, and was doing some M&A consulting. And I watched my dad miss out on a couple opportunities in his lifetime where he just didn't jump into the market when there was a big downturn. And so I took advantage. I took a big swing and I got into just regular equities. I'd stayed out of the market, went to school for finance, and everything looked overpriced to me. And so when I got the chance for the pullback, I jumped in with both feet. I didn't get the bottom, but I rode it back up. Tesla, Amazon, Google, Facebook, just stuff that I thought, okay, if the world shut down, like everybody's gonna be online. And so I think these are gonna do well. And they did. And so, rode those back up, doubled my money very quickly. And as it got back to the same levels that I was, hesitant to invest before, I thought, okay, is this a dead cat bounce? Like, what happens here? And so I started to look to de-risk and got into crypto.
Wow.
I was watching
maybe not the traditional kind of way of de-risking, but hey ho.
Well, how I found it was I was looking was looking at gold and I was looking at real estate. And so, I'm sure many prominent gold bugs out there. You got Mike Maloney and Peter Schiff. And I was watching a debate between Peter Schiff and a Bitcoin guy. I just kind of stumbled upon it and doing my research on him. And I understood why everybody, was freaking out about this back in 2017. I'd watched my brother turn about 5 grand into a couple 100 grand back in 2017. He didn't pull it out. He was like, it's going to a million. And then zero, in the bear market. And so I felt vindicated. I was like, it's a Ponzi scheme. See, told you. But it isn't, obviously. There's an actual technology here. And once I understood that these were protocols and what they were doing was moving value, and it was a distributed ledger, an accounting mechanism that's transparent and immutable, and it can be used in a plethora of applications. I was like, okay, I can dig in here. And so did a ton of research. I had free time because it was during the lockdown, and rolled everything that I made in stocks over into crypto across 13 different positions. And I just vetted companies and blockchains the same way I would stocks. I've looked at partnerships and the total addressable market that they were trying to, consume with whatever they were tokenizing or problem they were trying to solve, the partnerships that they had, and really just kind of analyzed it that way. And so I invested in stuff that I thought was going to have like future utility. And we're still pretty speculative here in crypto, but it worked out well. Ended up making a pretty good sum of money back in 20 and 21, and didn't grow up wealthy, like I mentioned. I just had gone to college for finance, and I knew that I needed to surround myself with the right people. So I used my sales skills, which is what I've done my whole career, and I just started smiling and dialing all of these different professionals across the U.S. that said they dealt with crypto on their website. So accountants, CPAs, wealth managers, estate planners, tax attorneys, whoever I could find. And I called over 100 different firms and whittled it down to the 10 people I worked with for my personal stuff. And was like, this is great. I was able to mitigate taxes and set myself up and structure stuff. And I started talking about it on Twitter. Again, world's kind of shut down and everybody's spending a lot of time on the internet. And this is actually a little bit later on. This is like 22 when I started really talking about it on social media. And I was met with a deer in the headlights look. Like, what do you mean you can structure your estate for crypto? What do you mean you can mitigate taxes? There's no regulation on this stuff. None of the professionals that I know will even talk about it. And so people were nice enough to make some introductions for me to some other family offices, and started consulting for them. And then over the last 3 years, we've built Digital Ascension Group into. There's a couple other family offices here in the U.S. that specialize in digital assets, very different in their approaches. One is more of a buy and hold Bitcoin type family office. They work with 15 families. And they are also a multifamily office, similar to us, provide estate planning and other things. They also, hold their clients' assets at Anchorage. They do have an SEC regulated RIA. They manage a little over $1 billion in Bitcoin. We're close to $1 billion in mostly XRP. So that's one of the main differentiators for us. Is we're looking at other assets that we believe will have future utility and figuring out how to put those assets to work to generate revenue and cash flow and mitigate taxes for our clients. They're more protection oriented and diversification outside the asset class itself. And then the other family office that is SEC registered focuses mainly on DeFi and not so much on the institutional custody side of things. So very different. We all work together in some capacity, and there's some overlap when we pass people between each other when it's relevant. And then so close to $1 billion. We started taking on people's crypto about 11 months ago. So you made these investments, but we create a Schwab account basically for you. So you're able to add beneficiaries, your spouse. You're able to build in governance if you have a trustee. The assets are held securely there for you in your name, segregated, bankruptcy remote, and insured, so that you don't have the risks that you run with a cold wallet. Now, do you give up a little bit of a degree of control? Yeah. But we also structure your estate in a way where you maintain your anonymity most of the time. So,
and life's all about trade-offs,
anyway,
right?
Yeah. You control and ownership, right? Like if you talk to the wealthiest people in the world, centimillionaires and billionaires, which I've been very blessed to have conversations with, they control everything and own nothing.
Yep.
And that's how they structure it. And so, and taxes are always going to be your number one expense, no
Yes.
matter where you live in the world. I'm going to say that there's a few jurisdictions that are pretty nice on the taxes, but for where you guys are, and then also here in the U.S.,
Nightmare.
that's going to be a big concern. So it's a big focus for us.
Yeah, there's a lot of things I want to pick up on that you've just kind of mentioned there. First of all, just a well done for being so early in regards to what everybody's eventually going to have to start doing. You know, certainly if they want to take crypto and investing and protecting their wealth seriously, you know, you're doing it right now, right? You've been doing it for 11 months as far as taking on client funds and helping these people get ready for what everyone's going to have to deal with. Certainly if crypto becomes as big a thing as we believe it's going to. The one thing that's interesting, and this might give us a take on or lead into perhaps your thoughts on the broader market, which I'm sure we're going to get into, because crypto is now becoming an increasingly part on that. When you had that sort of crash in 2020, and you obviously thought, okay, now's a great opportunity. Once you saw that engulfing of that pullback that was caused by COVID and all the other things that took place, obviously predominantly COVID. Once the market went on and put in a high, it then went on a pretty epic run. Do you think we're looking at something similar right now for the likes of the S&P, having engulfed that 21% pullback caused by Trump's tariffs, or at least perceived economic effects of Trump's tariffs? Do you think the S&P might be on a similar sort of run akin to that? Obviously, there's a different criteria that goes into it. What are your thoughts on that?
I do,
Yep.
but I also think that there are catalysts out there that could cause another 50% drawdown in markets across the board.
Okay.
So similar to a V-shaped recovery that we had out of COVID,
Yep.
I think that we're in store for another one of those before we do have that inevitable, decade-long bull run in markets.
Wow. See, because this is there's a lot of kind of back and forthing between analysts. I perhaps maybe sit. The catalysts I think are very evident, right? You've only got to look at the US sort of treasury markets and things like this to try kind of be alarmed, to say the least. I maybe sit on the other side of I think we could have had a sort of mini bear market and now in a prolonged bull market. If you look at the S&P 500, every time it's done a 20% plus pullback and sort of retraced it, it's usually gone on and extended for periods of up to a year or beyond. However, given that this time is different, saying, well, this could be a different time, and there's a load of catalysts that are here,
Yeah.
right? But I think we need to maybe have a broader perspective on the markets, the S&P 500 being really one to watch and a barometer for everything going on, to try and work out what's going to happen with crypto. So it's interesting. People like yourself maybe see the plausibility for
I actually look at the Russell. I think
Russell
the
2000.
Russell 2000 is actually a bit more correlated to crypto's expansions in the past than the
Yes.
S&P. The S&P tends to set new highs. Well, it runs along kind of with Bitcoin.
Yep.
So if you were to correlate the S&P and Bitcoin, I agree with you wholeheartedly. I'm mainly focused on the altcoins, right,
Of
and the
course.
potential there, and so those tend to be a bit more correlated with the expansion of the Russell, kind of small and mid caps versus the leaders like FANG stocks.
Yes. And what do you think? One interesting chart, I really want to get into crypto, but one interesting chart we're looking at right now is the IWM, the Russell 2000 versus the S&P 500. And we actually think the Russell's going to start moving against the S&P 500, which could be in line with what Bitcoin dominance is perhaps doing, and a variety of other signals we're seeing with ETH and things like that. What's your take on that quickly before we start to get into crypto?
Yeah, well, I think there will be a rotation. I think this rotation is going to be a bit different, though, because I mean, everybody says this time is
Of
different, but
course.
literally this time is different
Yes.
because of the ETFs and the volume there. I mean, Bitcoin was at an all-time high before the halving, which has never happened in a previous cycle,
Yep.
and that was because of the advent and volume and liquidity brought in from the ETFs. So I think that between now and the end of the year, you're going to get other ETFs on a few other digital assets that will launch. The SEC has put out that you need futures markets in place at least 6 months before they're going to be able to approve these ETFs. But I think that's where the actual rotation of that liquidity is going to take place in this market versus in the past, the majority of the liquidity was on exchanges and in Tether. Whereas this time, when somebody sells their position in an ETF, that liquidity is not going to rotate to anything else that's not in that market. It's going to have to go to stocks or bonds or something else that's on the TradFi side. So, if there is a large pull down in Bitcoin and there is some rotation out of those ETFs, we haven't seen a huge pullback in Bitcoin this cycle
Yep.
either. The volume on the ETFs has kept it to somewhere, between 20 and 30% as a max pull down. Most of the time in previous cycles, we've seen 40 and 50% drawbacks in the bull market for Bitcoin.
Yes.
So I think if we saw something a bit more drastic in a drawdown for Bitcoin, especially if it was, compounded with global catalysts that are going on, I think that would be the advent for the rotation out of those ETFs into whatever else is available.
Yeah, and in regards to this kind of catalyst or pullback, how imminent do you think that is? It's one of the hardest things, and one of the things that people have probably lost the most money on betting on is a catalyst happening. Right, more people have lost money through sitting out the markets than probably getting into them over the longer arc of time. Right, but how imminent do you think this is? I have people I massively respect but wholeheartedly agree with. Um, and a warning right now of something major taking place and the market suffering at the hands of it. What's your sort of broader take on that? Because this is important. Certainly, if you start to see the signs of it, you know where to find Jake. We'll leave links to everywhere in the description.
Yeah. So interest rates, right? Like you mentioned, the treasury market here in the US,
Yep,
and then also the treasury market abroad as well. So
everywhere.
over there in Japan and the UK, rates are rising very quickly. And that's an indicator that interest rates need to be brought up by the central banks. Um, there's inflation across the economies. Job numbers are starting to come out, not looking as good. The Fed always seems to act reactively instead of proactively. And they are dovish now, and it looks like Polymarket's got it at almost 100% that we're going to see the Fed lower interest rates here in September. By how much, we don't know. There's large institutions speculating more than 100 bips.
Yep.
And the only reason that they would do that is we did see a significant pullback in markets. I do think the catalyst for that is going to be the reverse carry trade unwinding. We saw a little bit of that in August last year.
With the yen. Yep.
About 13% down in the S&P in one day,
Yep.
right? So, that kind of was part of the pullback that you mentioned, and then was exacerbated by the tariffs. But when we start to see those moves and we get limit down, limit down,
Yep.
limit down in markets, that's going to be when I think there's opportunity. Also, you got Uncle Warren with $400 billion in treasuries sat on the sidelines, ready to deploy. He finally bought something the other day. I saw him
Oh wow.
move on a few stocks with a couple billion. So that's also an indicator to me that I think things are going to materialize much sooner than later with this, downside in the market.
Yeah, let's hope it wasn't
But I do think,
Lockheed Martin and other stocks like that, right? That would be a real telltale sign, huh?
yeah, well, and I think that oil could be the catalyst for this. So if we
Okay.
did see a spike from conflict in the Middle East or some things going on in Russia that cut off oil supply to Japan, they would have to aggressively raise interest rates
Yep.
very quickly, which they need to anyway because of the bond yields that they currently have. But that will exacerbate and roll all of this. And crypto plays a critical role in stabilizing the economy. We got the Genius Act here in the US that allows for stablecoin issuance by the large institutions. And it just so happens that the demand that they predict for those stablecoin issuances here in the US is about the same amount that we have as outstanding debt
Yep.
outside the US for other countries holding our treasuries. It's about $2.3 trillion. So if you wanted to make sure that you had a backstop to stabilize treasuries in the bond market, it's a really good way to do it.
Yep, that's extremely interesting. It's why we love having people like yourself on. It's such an easy conversation when we talk to people who know what they're on about, and don't just know what they're on about as far as crypto is concerned, but the world around it, which we need to pay attention to, right? Everyone has their kind of blinkers on because we're so, I guess, in awe of where we see this technology going and the wealth shift that technologies historically have brought, and the one here today with crypto. That's why you're positioned in the manner that you are, and you're doing an amazing job and helping people in doing so. Um, but there's a lot of landmines around, and I suppose there's kind of two sides. You're either expecting these catalysts to mature and to take place, and you're going to see bond yields spike and things such as what you mentioned occur, or you're not. And one I think there's every reason to have heightened kind of alert right now in regards to the kind of global macro situation and the effects that might have on crypto. There is the path, or an easier path ahead, where actually they kind of get things under control, which historically the Fed haven't been amazing at, but there's always this time, right? So I stay very optimistic. I think a lot of the things that we're seeing might lead us to continuation, and we might not need that kind of slam down. But then I also very much appreciate where the fears around that are coming from. I don't think they're unwarranted. So it's quite a hard tightrope to walk,
Well,
really.
I agree with you. I think that it's going to be a V-shaped bottom
Yep.
very quickly back up to the upside. I don't think it's going to last very long. I know a lot of people are concerned, when this unwinds or bad things happen, there's going to be a depression. If you look at 80 to 100-year periods in
Yep.
macro, we've had 2 recessions in the last 80 years, and we haven't had a depression. And most um, cyclical patterns suggest that that is where we're headed. But I think with the advent of crypto and AI and a lot of these other converging technologies that are super progressive and actually deflationary, we're poised for a significant growth in GDP and real value being created that'll spawn, one, reduced frictions across the economy between counterparties using distributed ledger technology and smart contracts, and then the AI on top of that for the learning and how quickly you can spin something up. The progression and rate at which technology will advance from here is going to be exponential. So I agree with you. I just think we have one more problem before we get that big move to the upside and across all markets.
I could absolutely see it, and I also agree with you in the sense that I think technologies can kind of incur or induce a real economic boom. Chris Larson loves the shipping container analogy, right? And he kind of likens XRP to the shipping container. And once you implemented a kind of very primitive technology that was a shipping container, which it seems primitive to us now, but at the time wasn't. Once you kind of standardized how shipping works via these containers, you saw like a 700% increase in global shipping, right? Crypto offers very much a similar thing. And we know this through micropayments. You're going to see entirely new economies form and business models and all kinds of weird and wonderful things take place. Talk about AI agents, all of this stuff. We could talk about this stuff all day long. Let's bring this to crypto. I know we've been relating all of this to crypto.
Yeah.
What was the real kind of aha moment? What kind of made you say, okay, not only did you do well off of it, but what kind of made you do what you're doing now in regards to what made you realize the opportunity that crypto actually has to offer? Was there a moment? Were there multiple moments? Talk us through to how you kind of are zealously set up today in regards to helping people in this technology.
Yeah, it's been an amalgamation of different conversations and just wonderful things in my life that have kind of transpired and culminated to bring me where I'm at today. Some things seemed horrible at the time, and they always end up working out for your good. Um, I would say, when that light bulb moment for me was that conversation with Peter Schiff, and I don't even remember the gentleman's name that was talking about Bitcoin. But when he explained it as a protocol that allowed value transfer and removed counterparty risk and created efficiencies where money could move real time, and you have real time settlement with no intermediaries. I worked in banking for a very short period of time. I was a teller. The analogy that I give a lot of people is payment apps. You guys probably use Wise over there in the UK. Here in the US, many people use PayPal, Venmo, or Cash App. When you receive a payment from somebody else in there, you get 2 options. You can move it to your bank account, and there's instant, but it costs you some money, and they'll pre-fund your account. Or you can wait the 2 or 3 days for it to actually settle in your account. And that's a good illustration for most people to understand how money actually moves today. And my analogy is, I said, well, what if you could have instant for free? And then everybody inevitably says, well, yeah, I would pick that one. So do the banks. So does everybody else. And that's what crypto allows, right? So that's the opportunity here. And then you can build, there's a ton of other things that you can build on top of that, but that's kind of the bedrock and base case for crypto is payments. And so once that's disrupted, now that we have stablecoin regulation almost globally, I do think that advent of that taking place is very close at hand. And then you'll see liquidity pour in to this ecosystem, and with that liquidity, you'll be able to then start creating markets and doing a lot of the other tokenization of real estate and stocks and many of these other asset classes that people are excited about, and even have started doing, but there's really not any market action or liquidity to be able to trade them in the capacity that most people see as the value for that. So, um, we've built other technologies. We have an end-to-end fund administration platform for SPVs here in the U.S. We run numerous private offerings with our cohort of investors, and streamlining that, and then creating private equity marketplaces, and bringing liquidity to illiquid assets like real estate, and other things there. I do think will happen. I think it'll be a bit slower, but by 2030, I think we'll see the full maturation of a lot of asset classes being tokenized, and that's really where the value is, right? If crypto is going to eat all of these other asset classes, I don't think people really comprehend. Like, they look at market cap of these assets today and they relate them to stocks or businesses. How do you relate the market cap of global GDP
Yeah. Right.
being held on chain? You know what I mean? Or all of the value globally in commodities and FX and business, real estate. If all of that's on chain, it has to be moved by some of these networks, or majority by one. Like, that's a lot of value that's going to move into these ecosystems, and by proxy into these tokens. So if you're in these positions now, you're poised to do very well
Yep.
over the next 5 and 10 years.
That's the real opportunity here, right? Isn't it? That there's a clear trajectory for what this technology is going to do, certainly for the financial world, and where we are in regards to that adoption. We literally are at the firing pistol, I think. I think maybe a little bit just past that. Maybe it's just gone with all the things that we're seeing, but we're right at the start. You're picking up Amazon at the low of the kind of .com crash, perhaps. I think that's kind of where we are. And if you look at it, and the beautiful thing about what you're saying is, it's not just you saying that right now. It's Paul Atkins at the SEC saying a new era for financial markets is upon us, right? It's the likes of the President of the United States. And I know you've done a lot of digging into this. If you look at the influential people in power, central banks, your large institutions, they're all in agreement with what's coming and making it very obvious. And we're now just starting to see a road towards that get essentially established. And you talk about valuations of cryptocurrencies, and I've always sort of racked my brain in regards to how to work out how high the valuation of an asset like XRP, for example, could get to. And I think comparing it to traditional assets and how they're valued is wrong. It was an individual from Franklin Templeton that essentially said, look, these are global commodities, right? They're not stocks. They're not things like this. I know, interestingly, BlackRock's head of digital assets, Robert Mitchnick, actually wrote a paper alongside an individual on the board of Ripple. Have you seen that paper about the valuation of Ripple?
I have.
And one of the high estimates for that valuation, by the way, and we'll probably throw it up on screen, was $32.90 something cents, right?
Well, yeah, in the paper, but Robbie actually created a calculator. It's difficult to find online now.
Okay.
But it actually shows how XRP would need to operate at around $10,000 per token.
Wow.
To fulfill its actual use case. So yeah, interesting that Robbie's now in the position there at BlackRock.
And I stumbled upon this paper because we were talking about ETFs with someone, and I said, I think people are underestimating how much volume the XRP ETFs actually going to see. I think it's going to beat Ethereum, certainly to get to that $10 billion mark. It was 250 something days. I don't think it will quite beat Bitcoin at 52 days. I could be horrifically wrong. I'd love to be wrong as an XRP holder. So I think it falls somewhere between Bitcoin and Ethereum. And I think if you look at what the CME futures have done, they're the fastest ever futures to get to $1 billion in open interest.
3 months.
Yeah, 3 months. Yep. Crazy. And so I think people are underestimating that. And one of the questions came up, well, BlackRock's not going to offer an XRP ETF. And I said, well, why wouldn't they? Robbie literally worked at Ripple in 2017, wrote papers on valuing it. Seems logical, right?
Well, anytime they've been asked about it, and Brad as well, they just say, I can't talk about that.
Right. Yeah, they give us the wink, as it were.
Yeah.
But this is interesting stuff. And I think also in terms of how do you value this stuff, And we'll get on to maybe how you're looking at value in this stuff. People also aren't accounting for the world that we may be in the next 5 years. If you look at the largest stock in the 1800s, we're not going to go that far back. In 1980, it was IBM in the US. It had a $50 billion market cap. Today, you have $4 trillion stocks.
Yeah.
People aren't accounting. When you put out these sort of valuations, there's so many variables that people just don't account for. They just kind of linearly look at a stock and say, well, it can't possibly. And I think they fundamentally don't understand what's going on here. So talking about your kind of interest in crypto and payments and things like this, it only seems right that you were naturally drawn to Ripple and XRP. How did that start?
Again, just kind of deep diving everything else that was out there. Um, I don't, I watched BitBoy, like a ton of YouTubers when I first started, right? And I was like, okay, some of these guys have made a lot of money in this stuff in the past bull markets. I'm just going to figure out what they're investing in. So I got in Theta and XDC and Quant and VeChain, Cardano. There's a lot of projects that people had done well on in the past or thought would do well in the next bull run. And so I just started deep diving those projects. And obviously one of those was XRP. 2017, people had made a lot of money, going from 3/100ths of a penny at the bottom of the bear market all the way to $3.84 at the high. I was like, all right, well, if we get another run like that, like we can do pretty good. So that's kind of what drew me to it to begin with. And then after doing the research on it and finding out about Ripple and what they were building, utilizing the network, and really kind of deep diving the history on it, it's just become more and more of a conviction for me over time. I spent probably, I don't know, a year and a half trying to figure out how I was wrong about it going to these high prices, waking up every day, challenging myself, saying, look, like, this seems ridiculous, like, and I know that I sound crazy now, even talking about a $10,000 XRP. People are like, get out of here, dude. Like, 10 to 13 bucks is the top on this cycle. Just stop talking about these crazy numbers. But in reality, if you look at the global macroeconomics and you look at the value proposition for the network itself, it can. I'm highly confident that it will achieve those numbers, and it is because if you looked at the market cap at that point, it would seem, again, like it incomprehensible to most people. To have quadrillions or septillions of dollars on chain, how, right? But the difference here is stocks are all available to be traded. All those units are available to be traded at all times. So that demand, whatever it is on the stock and whatever it's priced at, is a correlation to the total outstanding shares versus what it's trading at. These cryptocurrencies can be held away, right? And so that you've already seen some of this with Bitcoin. There's a ton of Bitcoin that's been lost. There's a ton of Bitcoin that people just hold that they're never going to sell for any reason. Institutions, ETFs, other people are buying this up, and that's driven the price up. Supply and demand, just normal economics, right? So total outstanding amount of a crypto versus what's available are two very different numbers. If you look at XRP in particular, there's 100 billion that were minted. There's less than that now because a little bit's burnt every single day. It'll last, close to 50,000 years at the current burn rate, which people are like, oh, it's all going to get burned up. Not anytime soon. That's why they made 100 billion of them. But the total available supply across exchanges, if you were even just to look at the wallets, is somewhere around 9 billion, so 1/10 of the supply. And then that's not actually what's available to be purchased. The exchanges have an accounting overlay across all the wallets that they hold that allows certain portions of that to be tradable and what's held by retail. So in my estimation, based on years of study, I think there's around 2 billion XRP currently on the market available for trade between the exchanges and retail. So 2% of the total supply, right? So now if you're talking about $5 trillion a day for Swift volume to move through the asset, what's available to actually move that? Not a whole lot. Now that's where you're getting these crazy moves to the upside. And that has to, there has to be liquidity driven into the asset, but those trading volumes will be what sustains it at those high levels. Um, and so I think that that's the paradigm that a lot of people have a hard time getting over, is the actual utility of these networks hasn't even occurred yet. All of this is speculative, but they need to be, again, like I mentioned earlier, once they drive the liquidity into these networks and issue stable coins and there's volume, then they'll be able to use it in the capacity that a lot of the people that are invested here are hopeful for. So that's how I think we can get to these crazy high valuations. Is again, just traditional supply and demand, but a much smaller supply than people think is available, is what's available. And then I think that demand for these assets, when there actually is utility, will be astronomical, and that's what will cause the market cap to look as crazy as it will.
Well, I could wholeheartedly see it. And I think if you look at the catalyst that we have in front of us, right, you talk about that kind of limited supply. We've got ETFs we just touched on. We've got the rise of XRP treasury companies. They're coming out of the woodworks. I think we're going to see a lot more of those out of Asia, which is already embracing Ripple as a company. And certainly somewhere like South Korea is one of the largest holders in terms of demographics of XRP. And why wouldn't the kind of continent of Asia adopt a competitor to Swift, for example? They seem ripe for it.
Well, I don't even think it's going to be Ripple that's the big winner.
Oh, wow.
For XRP, I think R3 is a sleeping giant that people just aren't paying attention to.
Okay, let's explore that.
So, are you familiar with SBI Holdings
Yes.
in Japan and Southeast Asia?
I believe they're about 9%
Very prominent.
holder of Ripple as a company as well, aren't they? They own about 9%. And a lot of XRP also. They could be one of the biggest treasury companies, right?
For sure. And then they also own a 10% stake in R3.
Oh, wow. Really? Didn't know that.
Yeah, most people don't know that.
I know. I think I might be thinking of the wrong company here. But was XRP not given to R3 at one point? Was there not a deal between Ripple? But I know there was a falling out with that. These falling outs, like for example, I'm just going to put this out there into the ethos. I don't think Jeb McCaleb and Chris Larson actually fell out. I think Jeb was just assigned a different task.
Well, there's antitrust laws here in the US.
Okay, of course.
So you need competitors in place, or competitors,
Yep,
to make sure that you don't violate any antitrust laws. Little birdie told me, and maybe this is true, maybe it's not, that the reason the acquisition of Circle from Ripple didn't happen was it would violate antitrust laws.
Yeah, you're looking at monopoly. Yeah.
Yeah. So you need competitors in the space to compete against one another.
Yep.
So that people can have a market,
Wow.
right? And that those things aren't problematic later on. So if there was a falling out and people separated ways and somebody started something that was adjacent but not quite competitive,
or tackling a different side of things, and they both work
peer-to-peer merchant services versus back-end settlement and wholesale markets. Yeah,
I see where you're going. Let's stick to R3, but I do know a little bit about. Of course, I know who R3 is. I know they like the Bank of England and people like this working with them. But yeah, let's stick on that because I think that's a really interesting place to take things.
Yeah, so I mentioned Swift earlier, and the volume that they transact daily is $5 trillion a day in settlement between counterparty banks using Nostro Vostro globally. It's about $27 trillion locked up in Nostro Vostro accounts. So for people that aren't aware, that means yours and ours.
In Latin,
in Latin, yeah. So people take their money and they park it with a counterparty bank, and that's what allows them to settle to that bank, right, into that account, basically. They pre-fund it. So all of this money is locked up all over the world that could be put to use in loans or a much higher yielding capacity. And that's why they charge you a pretty decent amount on wires to move money, right? This is still a loss for them at the end of the day, because the opportunity cost of holding capital there is significant, especially if they're having to hold it in an inflating currency like the Turkish lira or the Argentinian peso or Zimbabwe, right? Like they don't even want to hold any currency in those jurisdictions. And that's really kind of where a lot of this started, is, with XRP and ODL for Ripple. They've trialed and allowed people to settle into these jurisdictions without having to hold that counterparty risk of those currencies, right? They can settle real time between those counterparty banks utilizing XRP instead of pre-funding those accounts. But I think that'll become more prevalent, especially if there's more liquidity in the asset. But again, I don't know that it'll be Ripple that actually wins out. If you listen to Brad, he says he thinks, by 2030 they'll have maybe 14% of Swift volume at Ripple. Brad wouldn't just throw out a number. He's
There's
he's
some
pretty
model
calculated.
somewhere, right? Yeah.
Yeah. So I think that Swift will end up adopting R3's infrastructure with Corda, which is a private permissioned ecosystem. It allows the banks to do what they want, build their own infrastructure, partner with them. If you look at the seed investors for R3, it was all the investment banks here in the US. They've only done one other round after that and haven't taken any more money. And again, that's probably because of the lawsuit with Ripple, where they were awarded 1.04 billion XRP. They were originally allotted 5 billion and ended up settling on one. Now, maybe they've sold some of that off to fund their business and other transactions. So maybe there's not even that much that they have left to be able to facilitate all of this. But if they were to be awarded, the contracts with Swift for instant settlement, because Swift is a messaging system, they just adopted ISO 20022 globally. Again, like you talk about the shipping container, right? Like you need a standardized way to move data packets for all of the messaging alongside these payments globally. And that's what they've implemented over the last 4 or 5 years here. And that's the predicator, or what would precede the ability to settle real time, because you don't have to reconcile that information. You would know exactly which accounts it went to. So no networks themselves are actually ISO compliant. I hear a lot of people talk about that. But the technologies and messaging systems that have been developed on top of them or by these, players like Stellar and Ripple are what is ISO compliant. And then they can utilize these distributed ledger technologies and the assets to settle real time. But the primary settlement mechanism that R3 was originally, intended for was XRP. They've partnered with Solana to trial some things. I know there was people that talked about that here recently. But if there's enough liquidity in XRP, and if there's legal clarity around stuff, which there is for XRP, and these other assets are still waiting on the Clarity Act. If something were to occur, I think that R3, if it were awarded those contracts, or maybe even Project Ion, which they developed in correlation with the DTCC, were needed, they would lean on XRP for the settlement of those transactions.
Wow. That's extremely interesting. I've not sort of linked that before. I know R3 had some stuff to do with Ripple and obviously SBI Holdings, but that's extremely interesting because XRP's kind of whole thing, I very much see XRP as an all or nothing thing. That's personally my bet on it. I see it as either conquering the world and being that world reserve bridge asset, or it's just going to be one of those technologies that just didn't get adopted. That's honestly how I see it. I'm not looking for a small bit. It's either a winner or it's not.
Yeah, it's a dent in the universe.
Yep.
This is what Ripple wants to make with it.
And very uniquely positioned XRP as that kind of liquidity provider to actually be able to be that kind of world reserve currency. There's not really any other cryptos I know of that are even going at, like, I think about, we cover all kinds of cryptocurrency products. We have some favorites like you do with XRP and some of the others that we've just mentioned, but they're so uniquely positioned in all of this. It just kind of seems obvious that they're the choice, right?
Well, and that's what I said. I woke up every day for a year and a half trying to figure out how I was wrong.
Uh-huh.
And I just continually became more convicted. And at a certain point, you're like, all right, I've talked to all the people that I needed to hear it from. I've heard it from their mouth. I'm good.
Yep. The XRP rabbit hole is very much like that, right? You literally go down it, and the further down and down you go, you kind of hang on, wait. The BIS has been talking about this for years. The Fed have been actually talking about the using of Ripple as a company to help essentially route some of their transactions. If you look at what they're doing now with FedNow, which was created by Ken Montgomery and oversaw by Ken, who now works at Ripple, by the way, 2023. Look at all their service providers. It's kind of just so obvious, Ripple's positioning, and the evidence, I think, is really there for it. That doesn't mean it's 100% going to happen, but I think, and certainly I know you think, it's far more likely than not.
Yeah. I mean, with the BIS and the IMF, both of those are, and the World Economic Forum, there's a lot of counterparties there that have talked about XRP in different capacities. You even have a white paper that was written by the IMF in 2014 that references an exchange rate peg. And it's interesting to me that Ripple actually rebranded XRP that year from Ripples. It was originally, when it was minted, was called XNS. And then when it was gifted to Ripple, they changed it over to Ripples, and then it became XRP a little after that paper was drafted. So, a lot of people talk about the ESDR, and the special drawing right and the Bancor, that was proposed back in 1944 during Bretton Woods, when the U.S. ended up winning out and backing our currency and cementing the U.S. dollar as the global reserve currency. So I think they've kind of gone back to the drawing board and said, "Hey, look, like let's backtrack here. Maybe we should have gone this direction at that time." But I don't think that XRP itself will be the ESDR. I mean, it's a basket of currencies. There'll still be sovereign currencies globally, and there will be reserve currencies. There will be multiple currencies that the world transacts in. But XRP, I do believe, will be the global reserve digital asset that allows for settlement between all those counterparties, and that effectively would make it the exchange rate peg. You could even see global commodities markets and other markets globally repriced in XRP and drops. And I do think, I don't know how quickly that will happen, but I think within the next 10 years, that's a high probability if it is the option or the choice that you just talked about as the global reserve asset for settlement.
You bring up Bretton Woods, and throughout history, money has changed. And we all know about kind of Bretton Woods. We all know about the Nixon shock. And really what happened there was the kind of monetary order, the global monetary order of things changed, predominantly in regards to what that order was, whether it was a dollar system, whether it was a gold standard. Do you think we're looking at a kind of global reset as far as incidents like that happening again? Jerome Powell, a few months ago, actually dropped the Bretton Woods bomb and spoke about how we're kind of, some of the factors that led into that might be present today. Christine Lagarde at the People's Bank of China spoke about a similar thing this year. Do you think we're looking at a kind of another Bretton Woods? I don't really want to call it Bretton Woods, but a kind of global reset in regards to monetary terms? And I think crypto's the enabler of that.
Do you know who Judy Sheldon is?
No.
So she's a prominent figure here in the U.S. and has held some different offices at different times. But she's talked about she was one of Trump's nominees in his first term.
Oh wow.
I think that she could end up being the head of the Federal Reserve or whatever we end up transitioning to. If it's just the Treasury that actually mints our money here in the U.S.,
Yep.
which would be great, to not have the IRS and the Fed. We help people with taxes, and this is kind of a stigma that people have. I would love it if all of that would just go to a flat tax and we didn't have this crazy complicated tax code. You still need trust and you still need other things to protect yourself. So a lot of what we do is very similar, but not having to deal with all these crazy taxes at the end of the year to mitigate that would be great. If it was just like a value added tax like they have in Dubai at like, call it 10% here in the US, I think that would be great. So anyway, her coming in, she's talked about cryptocurrency being used in a gold-backed type of way. And she's also promoted the idea of a 50-year treasury bond being backed by gold, being issued on the 250th anniversary of the United States next year in July. And I do think that that's going to happen. I think, with Trump being in the position that he is, he's talked about, going back to a gold standard, using tariffs to be able to generate the revenue that we need here in the U.S. And removing the income tax system that we've lived on since 1913. So I do think that we're in for a huge transition here. This can be a very different paradigm than what's existed for the last 100 years. And I think it's going to be of the benefit or for the benefit of the majority of people.
Wow. It seems kind of like we're coming to a head, right? We spoke about sort of short-term catalysts that might see a 50% drawdown. Obviously, the treasury market, people worried about spiking yields. And I think there's a kind of shuffling that has to go on there. If you look at what's happening with gold right now in treasuries, there's a inverse correlation. Gold is being increasingly held by central banks. Maybe gold is that canary in the gold mine for all this. And actually, we're predicting, I'm not sure what your stance on silver is, that silver's going to make some pretty momentous moves. We're talking $300, $600 silver. I always ask myself, if you're going to get to those kind of valuations, what's the context of the world around? Exactly. And what's crypto doing,
Yeah. I love silver. I love gold too. Actually, I held my so I always recommend people have like 3 to 6 months worth of capital held somewhere that's kind of like their emergency fund, right? So for the last 4 years, I've held all of my emergency fund in gold and silver, and actually just liquidated all the gold that I had and swapped for crypto when we crest like 3,500. Because I do think that there is going to be a pullback. I think you're going to see somewhere around 2,000 or $2,100 gold when all of this actually kind of plays out. But again, back into a bull market after that. Maybe even repriced after that if it is used and pegged to gold in some capacity to back currencies. Um, but with silver, it's interesting because if you look at the gold to silver ratio, historically it's like a 40 to 1, and that would put silver very close to what the numbers you just talked about. We're just now cresting $40. Back in the '80s, we had the Hunt brothers, do the silver squeeze and push it to $50 a piece. And since then, it's been in a prolonged bear market, actually suppressed by JP Morgan and many others that are able to spoof the market and have been fined multiple times for doing so. Um, but you have to also think about production globally and how much silver is used in different capacities. I mean, your cell phone, solar panels, there's many other goods that require silver to actually function the way that they would like them to. And economically, if silver were to move to those valuations, you would need to replace that component across a ton of different hardware with something that was, the same level of efficiency but cheaper. You've got graphene, coming onto the scene here, and a lot of companies working on that. I think that could be a replacement, but we're not there yet for silver. And so, for it to move to those prices, I think it would cause mayhem across production and economically, for multiple applications. So I think that $100 silver is very reasonable, but I'd be hesitant to call for anything higher than that, just because of the constraints that I just mentioned.
I think that's a brilliant point. I really do think that's a brilliant point. Taking it to the kind of real world implementation of silver and what those prices would mean for it. Your iPhones and things like this, MacBook that we're currently on would be a hell of a lot more expensive, right? I actually had a friend of mine who had a company that was centered around essentially taking old electronic devices off people that no longer wanted them, picking them up for free, and actually stripping out the metal contents. Crazy company idea, but he did very well with it. So it's an extremely interesting world that we're in, and there's a hell of a lot going on, and we could do individual podcasts on each sort of subject. We've spoken about XRP. What are some of the other cryptocurrencies and the cryptocurrency projects that kind of resonate with you and that you think are going to play a role in this world that we're moving towards?
So I did a video not too long ago on total addressable market for each, kind of market that's out there, whether that's commodities or insurance or FX or, settlement of the back end of the stock market, tokenization of stocks. There's a very different application between the settlement and transfer of value and the actual tokenization of the assets. I think people get that conflicted sometimes. HBAR has a ton of traction. You've got XLM, you've got XDC for trade finance. A lot of EVM based change. You got Polymarket that's out there, or Polymesh. You've also a sleeper that I found in that research that I don't think many people are aware of. And again, I have to say this is not financial advice. Anything said here is for entertainment, educational purposes only. Always speak with a financial advisor before making any investment decisions.
There's that exact description,
But,
that exact disclaimer in the about section.
well,
Don't worry.
if you need a financial advisor, you can just call us, and we have digital wealth partners, and we'll actually advise you on your crypto because they're licensed to do so. But I can't. So in saying that, one of the blockchains that I found that was very interesting is provenance. So Figure Markets. I don't know if you're familiar with Mike Cagney. I had him on my podcast. They're actually already tokenizing about $750 million worth of mortgages on that chain per month and rolling those up into collateralized debt obligations and selling them off on chain. And then aside from that use case and that volume, you also have insurance contracts being tokenized on provenance to the tune of, I think we're over $400 million now, which is a huge asset class. It's over $8 trillion in policies globally. It's 3 to 5 billion a day in settlement between premiums and claims. and the token associated with that network is called hash, HASH. Trades at like 2 cents. So, and it reminds me of XDC. When I first got into XDC, I had to go around my butt to find it and be able to invest in it. It was like one wallet where I had to buy ETH and transfer it there and then convert it. It was an ERC20 token when they first launched it, and they migrated to an XRC standard later on. It reminds me that there's only two places you can get hash, and so you go do a little research on that. But I found that one very interesting and compelling. It's the only thing that I've bought besides XRP in the last 3 years.
Oh wow! So that's perhaps telling, I guess. Given your kind of a zealous nature towards the crypto space and what you think it's going to do, what you're potentially looking into. Jake, I'm mindful of time. I've got two sort of last questions for you, and it's very hard to predict the future, but it's kind of what our job is, right? Or to at least have an insight into what we think it may look like. And it was actually Scott Bessent. Most people don't realize that Scott Bessent has an insane career in the financial markets. He's one of the only people that's ever made short selling extremely successful. He traded alongside George Soros when they did that whole pound raid, right up there with Stan Druckenmiller. And he said one of the best things an investor. Yeah, a lot of people don't understand how much of an elite he is in the world of finance, Scott Bessent. And he said one of the best traits, and it kind of didn't make sense to me initially, that an investor can have is an imagination. And you kind of think, well, hang on, how does that make sense, right? Surely you want to deal in the realms of reality, but no, you need to imagine what could be. And if you can do that and get that right, the world is yours. What do you think 2025 still has in store for us? How do you see the rest of this year playing out?
Very similar to what I mentioned earlier. I think that we're going to see an unwind of the reverse carry trade within the next 2 to 3 months, with a sharp drawdown across all markets with a lot of opportunity. And 99% of crypto will go away. I think that we will be left with the winners and what's going to be around, for the next decade and be adopted for actual utility-driven networks. And then, you potentially have the passing of the Clarity Act and full regulatory clarity here in the U.S. on what's the security, commodity, and everything else for these assets, which is going to cause a boom for this asset class. Cambrian explosion is what Chris Larson calls it. And I think that we're in store for that here before the end of the year. And I've made bets on that, public bets about it. There's a lot of people that don't see eye to eye with me. And to your point, it's the imagination and what you can see that other people can't, that allow you to make bets. And when you bet big on something like Michael Burry back in 08, or actually 06 is when he started that, and he almost went broke, to your point, trying to time it. But he ended up winning out, right? And he actually created a completely different financial product that didn't exist before that to bet against the housing market because of his imagination. So, I do think the most successful investors over time do have a very creative imagination and foresight, and they're able to look at markets and analyze things and put things together at a macro scale that other people just miss.
Yeah. Wow. Well, it's funny. My mentor actually wholeheartedly agrees with that exact thing happening based on what he's seeing in yields and stuff like this. Potentially being imminent. We were looking at the VIX and things like this, so it's going to be extremely interesting to see how the rest of this year plays out. And then, what do you think 2026? Plain sailing? I mean, it's in crypto, it's hard to predict what's going to happen next week, right? Let alone, but 2026, is this the kind of year of the dragon, year of crypto, as it were? If we get this sort of slam down and then recovery, surely it's going to be a pretty exciting year.
I think that it'll be the start of the next 5 years where everything starts to move on chain. I think you'll see securities, and it'll be interesting. It'll be actually the most liquid products that end up on chain first. And then over time, you'll get regulation where digital titles and NFTs represent value on chain for other assets. I don't know that that'll happen in 26. Derivatives will end up getting tokenized sometime in late 26 or 27, I think.
Yep. I think just to add to that, DTCC's Dan Donay literally said you will see active security trading on chain in 2026, and he is the guy. He's probably the most powerful individual when it comes to that stuff, right? So yeah, sorry to interrupt you there.
No, yeah. I mean, I'm not the only one,
Yeah.
right? Like I listen to people that are a lot smarter than me, and that's what allows me to put together my thesis. Similar to yourself, sounds like you have mentors,
Yep.
and you're following other people. You're reading biographies. You're looking through history and finding other people that have, seen things that other people couldn't at the time,
Yep.
and then trying to apply that to today. And I think that's what'll make people successful. Um, but yeah, I think that 2026 will be the year of tokenization of financial products.
Yeah. Yeah. Going to be a sensational one. Jake, I really want to thank you from the bottom of my heart for your time today. I know it's a Friday. I know you're an extremely busy man, very much in popular demand. We've absolutely loved having you on. We're going to leave links to where people can find you in the description. Is there anywhere you want to send people to find out more about yourself and what you're doing?
Yeah, absolutely. So if the wealth management or the family office services, private client services sounds interesting to you, if you've got more than 500,000 in your crypto portfolio, anywhere globally, also doesn't matter. We work with a lot of U.S. residents, but we have about 20% of our client base that is global. We would love to have a conversation with you. Just reach out to digitalfamilyoffice.io. You can find us there. And then if the wealth management piece is the main component, it's digitalwealthpartners.net. We also have a mastermind that's also global, over 6,500 people there in that group that all have an aligned interest in crypto and bettering themselves. That's at beyondbroke.com. And then I'm sure you'll have the links for all the different social medias in the link below.
Absolutely, guys. Go and check the link below. Ladies and gentlemen, that's it from us. Jake, thank you very much. We'll see you all in the next podcast.